Hello and welcome to our first series of The Real Deal, Bricks and Beyond. My name is Victoria Adjicum and I am from On Point Property Management Limited. And today we have an exciting topic to discuss.
Yes, my name is Anna Adjicum and I'm also from On Point Property. Today we are really delighted to welcome our very special first guest on Bricks and Mortar and Beyond, and his name is Anthony Lindsay.
Yeah.
Thank you very much for joining us today. And you have a really extensive experience in working with high net worths, building their portfolios, but we know that your passion lies with helping individuals starting on their property journey and guiding them and protecting them on their way. So today's topic, we're going to be exploring all things UK property with the mortgage sector. And we know there's lots going on in the mortgage sector at the moment. It's quite a scary time actually for many people. And we just wanted to say, in your experience and what you're finding now, what's the overview current mortgage market at the moment?
So right now, I think a lot of people are falling prey to the media. So more than ever, there's just so much information that's being put out there. So you see these headlines, everybody's trying to grab attention. So people are reacting, and not everybody is actually looking at their individual pockets. For the past 13 meetings of the Bank of England, they've raised the interest rates. Yeah. So that's really slowed down the economy a lot. But then you have a lot of people that had fixed rates when the rates were really low. They're coming out in 6 months or so they're stressing. So right now, there's just a lot of fear in the market. Yeah. What I'm seeing is that more and more people, instead of going on variable rates, they're going on fixed rates, but they don't know how long to fix those rates for.
And this is really important part, what you said then, when they're coming off these fixed mortgages, where we know for historically we've enjoyed almost 15 years of relatively cheap lending, cheap money. Yes. And we're seeing that coming to an end. So, as you said, the scaremongering is a lot. What would you say to someone, especially listening now, their mortgage is coming up for renewal? What should be their steps to assess that?
Well, I would say start to prepare for a mortgage. I tell people 6 months before you're ready to either buy your first home, or if you're going to remortgage, always start preparing. So look at your credit file, make sure everything is clean, everything is tidy. Make sure that you manage your spending, because affordability is a big thing, because banks, what they do now, and they have done since the crash, is something called stress testing. Yes. So they're not just looking about can you afford it now, but they're trying to evaluate, well, if you'll be able to afford it as rates go up.
Yeah.
Stress test. So what entails in a stress test?
So what they're going to look at is what the interest rate is currently. When you come off your rate, what the standard variable rate would be, and usually about 2% above that. So there's quite a bandwidth that they're going to be looking at. But one of the things that I did, so like as a career, I've been in banking for 30 years. I've done everything from collections to wealth management. And when I was doing collections for a really large bank, I won't say who it is, I managed the pre-litigations team. So we were the team that would do that last ditch effort to keep someone in their home. Because contrary to what people believe, banks don't want to take your home. Absolutely. They don't want, it feels that way because it's your home, but they don't want to take your home. And my department would go in there and see if there's anything else that we could do. But what we were able to prove in that time is that a lot of banks, these were the days, this was when I first made my first trip back to England. These were the days where they used to do 110% mortgages.
Wow, those days. Those days are completely gone.
So it's almost they're giving you money to buy your home. Plus
and put some money in your pocket.
Yes.
And decorate your home.
Yeah.
Wow.
So
I miss those days.
I know.
So as the market shifted, it then meant that people couldn't afford it. People going into negative equity. So if you're preparing to buy a home, we want to make sure and look at your budget. The banks are automatically going to do some stress testing.
Oh, absolutely. Yeah. So, I mean, you've covered even what I was going to say, the factors, what banks would take into consideration. What would you say to someone? What would be the right mortgage I guess for their specific needs and circumstances.
Yeah. So I ask questions. So I always make sure that I deal with each individual as an individual, because, you know, a lot of my clients work for the big tech companies. So, you know, it's your Facebooks, your Googles, etc. But a lot of these people, actually, it's surprising, they're buying below their budget, if that makes sense. So I tell people, look at your budget. Don't worry about what the news is saying. Don't worry what your cousin said or what your friend said. Look at your budget and speak to someone who's going to talk to you as an individual. Speak to someone who doesn't have a hidden agenda. Because I think one of the biggest factors is people go on the internet and get information, and they speak to someone, and if they're not speaking to the right person, they're not going to get the best information for them. So I would just advise people, make sure that the person you're speaking to knows you, knows your circumstances and what your goals are, and make sure that they're going to do what's best by you.
Yes, I know Victoria.
Yes, again, first-time buyers, you know, many of them are sitting quite anxiously. Shall we wait until interest rates drop, or what should they do? Should they sit idle? What's the advice for first-time buyer?
That's a great question. So I have people ask me that question a lot, and one of the rules, and I know you ladies are super experienced in real estate, the best time to buy is now. The best time to buy is always now, dependent on your individual circumstances. So as a first-time buyer, look at where you are in your job situation. Look at where you are with your savings, because there is no guarantee that interest rates will go down. And the way that the property market works, it's basic supply and demand. So when they put the interest rates up, you have fewer people chasing properties, which means it becomes a buyer's market.
That's it.
But when they put the interest rate down, then everybody's chasing the same properties, and you have more competition.
That's
so
it.
there is no right time except for the right time for you.
Exactly.
I really like that part. And I mean, Victoria and I, we have this all the time. I always say, you know, what is the economy? Your economy is basically the money you have in your pocket. And I'm really, really pleased that we're getting that message out, because that's one of our common questions. Oh, should we buy now? Where should we buy? And it's really down to the individual. So I'm glad that this is being highlighted. And typically now, especially, interest rates is like the buzzword. Interest rates. I mean, typically today, someone going in for a mortgage, typically, what is the interest rates that someone could expect?
So if we're speaking broadly, because there's a lot of criteria that goes into somebody's interest rate, but I'm seeing loans, mortgages that are starting with 5s, I'm seeing mortgages that are starting with 6, and high 6s now.
Wow.
But with that said, just this week, I got a lot of notifications from banks who are reducing their rates. So I know HSBC this week reduced some rates. These are for residential mortgages. You know, these are new deals. They weren't the remortgage deals. But and this is one of the values of having a broker. So I've managed 3 of the 3 largest banks in the UK, as well as manage branches in the US. And the thing is, when you go for a mortgage, if you go to your bank can only talk to you about their products. They're only going to talk to you about their products and services. Whereas when you go to someone that has access to a range of products and services, you can compare like for like at that point, as opposed to just getting one interest rate.
I mean, we've always, just ourselves as investors, I've always gone to a mortgage broker.
But I think saying that, I think many people think going to a broker is for an investor. And a first-time buyer, why would I go to a broker? You know, it's quite daunting for a first-time buyer to say I'm going to go to a broker, which, you know, they're new to the whole market, they're new to a mortgage. What's the the variations of the interest? Would they gain equity? You know, it's all foreign to them. So it is quite, a daunting thing for them to go and find a broker. So how would one approach a first-time buyer as well?
So I say this, and this is kind of part of my spiel. is the fact that I've worked in the branches. I've managed mortgage teams, and my teams were always the most amazing because I managed them.
I'm sure
They were always the most amazing in that product. And one of the things that I found when I moved away from the branch network is when a branch person does a mortgage, even if they have the right heart and the right mentality behind it, it's kind of like a service because they know this person is walking in. They don't have to have the best product. They don't have to have the best service, especially as a first-time buyer because they don't have anything to compare it to.
Yes.
So by default, they walk into the branch, and there's a level of trust. I mean, people don't trust banks, but
but they will trust to an extent because that's where their money
exactly.
is.
Yes.
So we always used to say, so there's certain dark arts within the banking world that aren't really dark arts. It's like wherever someone pays their salary, so if they pay into that account, you're gonna get their credit card and you're gonna get their mortgage.
Yeah.
Anywhere someone does their mortgage, they're gonna usually move the other products there.
Correct.
What I say to a first-time buyer though is you would always want to go to a mortgage broker, and how do you find one? You ask someone who's recently done a mortgage and is happy with the service.
Okay.
That's a good point.
I think the Google reviews is good, but I would rather have a first-hand someone live that I know that will refer someone to me.
And that's an important takeaway, especially I think with social media.
Yeah.
Sometimes it's the loudest voice is what people hear.
Yeah.
It's not the experienced voice.
Exactly.
And we have in our own agency just come across so many distressed buyers, distressed people who have had such a real ruthless and quite sometimes financially painful experience because they've lost money and they've gone to, again, the most loudest voice, not the experienced one.
Yeah.
And, you know, here on The Real Deal, Beyond Bricks and Mortar, we're very, very proud to say that we're letting our listeners and the audience know that there is a supreme network of professionals working in property tirelessly, making sure that they give and beyond what the end user needs. So that's really an important point there, going to a trusted referral.
Yeah,
Definitely.
And that accountability as well, because I'm of the mindset that I don't refer someone unless it's someone I would have work with my mom or work with my sister or my daughter. You know, but I think part of the problem that we do have though is people sometimes price shop.
Yes.
So they might come to me and I'm amazing. Like I'm amazing.
Of course.
And my price reflects how amazing I am. But in the grand scheme of everything, my broker fee is saving them time because on average I can help them get through the process 3 weeks quicker.
Yes.
It saved them some of the pitfalls because I signpost everything for them. So, and I don't do any of that. I do everything without charging, all the way up until the point that you offer on the property and you're doing the full mortgage application. And I've had so many people that I've provided that really quality service to, and then they'll take the product and go somewhere else and say, oh, you know, this other person's going to charge me less or whatever.
Yeah.
But 70% of all the clients that I have are people that have circled back to me and said, well, so-and-so got me an agreement in principle, which I will explain what that is to all the first-time buyers. They got me an agreement in principle. It took me 6 weeks or 2 months to find the property. I found the property, went back to X, and then they said, oh, you don't qualify. These are the pitfalls of just price shopping.
Yeah.
Because in the grand scheme of things, we're in London, we're buying 500,000, 600,000, £700,000 houses. The difference of the broker fee or the difference of the solicitor's fee in the grand scheme of things to make sure the deal goes through,
it's minimal, really.
Yeah, it's worth paying.
It's definitely worth paying. And you just, again, Vicky, we have this, is the signposting. The people don't realise the value of what you charge is your experience.
Yes.
Yeah.
Yes.
It's not how long that it takes you to do your experience will make it be a seamless process. And I always say, look, not every customer is going to be my client. And I think Victoria and I regularly have that with our services. And that's another important part. It's going to get to a time where either the prospective client is going to respect and want experience, knowing that this is a trusted person and that they're going to get the outcome that they want.
Yeah.
That's it.
Yeah, it's really important. I know, Victoria, was there any other first
Yeah, so the first time questions I come across is also, the interest rate, not the interest rates, the equity growth on properties. Is it worth them looking at what the potential equity growth is going to be on the property and the depreciation? And, as a first-time buyer, you want it as your first-time home.
Yeah.
Obviously, as an investor, you're looking at number works, etc. So your take on that for first-time buyer?
So the question I ask people, is this your forever home?
Yeah.
So if this is a home that you're planning on living in and having a family in, then what you have to consider is that most property, if you look at the span of time, it appreciates.
Absolutely.
Property appreciates, we're living in crazy times and anything can change.
Yeah.
But throughout history, property appreciates.
Yeah.
So if it's your forever home, just make sure it's somewhere that you want your kids to be, somewhere that you're going to be happy to be. Now, obviously, you don't want to purchase a property that you haven't done your due diligence and, there's going to be a highway that's going to be built next door or something. You don't want that. And that, again, these are the other values of having a good broker. But you don't necessarily need to look at the appreciation as the be-all to end-all, because you're going to live there. You're going to make a home of that property.
Absolutely. No, that's a good point. I think also, so someone's coming to you, you can give us like a step-by-step guide as a process how to prepare for a mortgage and how you would walk through the client to get to offering and completing.
So for me, my perfect client, because I do a lot of workshops, I do a lot of mentoring, my perfect person is someone who is hoping to buy a home in the future. That's my perfect person. So the next stage for me is someone 6 months out from purchasing a property. So the first thing that I would say to them, get your credit report.
Yes, number one.
Go and get your credit report.
So important.
Where could they get that? Just so
you can get it through your bank. There's lots of different ways that you can get it, but I use a platform called Check My File.
Okay.
Because the thing is, there's 3 credit reporting agencies. Not every lender reports to every credit reporting agency.
Oh, right.
So this platform shows you all 3.
Okay.
It's comprehensive. It shows everything. Now, the reason, and this is my collections head, the reason why I always tell people to check their credit file is because there may be things that you've forgotten you've had. There may be things that somebody else has opened in your name. So step number 1, make sure that your credit file is what you want it to be, because banks are really hot on something called disclosure. So I explained to them, listen, if you have a credit card and you had it for 5 years and you've paid every month on time, never missed a payment, never gone over, but you don't tell the lender about that credit file, they'll view it worse than someone that maybe had that same credit card for 5 years and has missed a few payments, because they're like, why didn't they tell me in the first instance? Why didn't they tell me that they had that credit card? So you always have to disclose everything, even if it's a credit card that you never use. 0 balance, you never use it, you paid it off 4 years ago, you always have to disclose it.
So would you say that's why you should get the credit report, because maybe you forgot
Exactly.
So credit report, because I'm familiar with Experian.
It's amazing.
And call credit.
So
and another thing which is hot on news topics is student loans. Does that affect someone who's purchasing and completely forgot, actually I haven't paid off my student loan?
It does and it doesn't. The reason why, because it's taken directly out of your paycheck. So all we're going to really look at is the average of the last 3 months, because it can fluctuate. Like if you got a bonus, they'll take out more.
Okay.
Banks they're not really that concerned about the amount that you have left on your student loan, because it comes out of your paycheck right away. And when we're doing the affordability assessment, it's almost pre-calculated.
Okay. So it doesn't negatively impact.
No.
I think that's the main question. That you get quite a bit.
Especially now. And no, that's good. And you're talking through the steps again.
So get your credit report. The next thing that I would say is clean up your finances. So there's actually a question with a lot of the lenders. They'll ask a question like, have you ever taken out a payday loan? They'll look to see if you have certain subscriptions to certain services, especially gambling like subscriptions. So it could be just something that you do for fun.
Yeah.
It doesn't mean that you necessarily are spending a lot of money, but they see those things and those become red flags for them.
I see.
So clean up your finances, make sure you know everything. Another thing that people do, which they think is right, but I always advise people not to do. So if you've had a credit card for like 5-6 years, or a line of credit, and let's just say you don't use it, and you're like, oh, I'm gonna get a mortgage soon, so I'm gonna shut that down. Do not close the account.
Okay.
Do not close the account.
That's a really good tip. So just leave it open.
Just leave it open, as it has been, because what happens is your credit card profile. It's going to take the average of all the cards that you have, the length that you've had the credit cards.
Right.
So let's just say you close the one that you've had 10 years and the rest you've had for 4, 5, 6. It brings down the average length of credit. And that's not an amazing, I mean, it's not like missing payments, but it's an unnecessary thing to do that's not going to move you forward and can move you
like
back.
you said, people get confused with that, and I've always said to people, believe it or not, if you don't have a credit card, get one out.
Yes.
Use it for 6 months.
Yeah.
Because what you're essentially saying is, look, you need to make yourself attractive for lending.
Yes.
Yeah.
They want to know that you're responsible.
Yes.
If we're going to lend you 200, 300,000 pounds, this person.
Where are you buying a house?
Oh no, gone are the days.
Yeah. But
500,000.
You can't even buy a shed now.
Another common mistake that I see people make: never, ever, 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 ever pay it off every month, definitely, but don't pay it off before the statement cycles. So what happens is every month your statement cycles. So that means it generates a report to say this is how much is outstanding on the card. If you pay it off before that statement cycles, it will always say 0. So the uplift that you'd be hoping to get from showing that you can manage credit, you don't get because it never registered that you had a balance on the card.
Yes.
Did you know that, Victoria?
No, I didn't. That's why we have the expert here as well.
We're learning something, as I said. Property, investing, financial, it's ever evolving. It's a never ending education. Because I always thought you pay it off. So you wait for
definitely pay it off.
But wait for
it to cycle and then pay it off.
Right.
So it almost shows that the debt has been there and then you paid it off.
Rather than it was always 0.
Makes complete sense.
Okay.
No, that's a really good point. So that's step 2.
So first thing, get your credit report, clean up your finances. Then you're going to look at your outgoings, because there's different levels of the assessment of your affordability. So you could make $100,000 a year and spend $999,000 a year.
That's it.
And someone else could make $50,000 a year and spend $10,000. The person that has £40,000 a month left, or a year, or whatever, they're going to have affordability. Whereas the person that's making a lot of money but spending all the money, so
it's not going to look good.
It's not going to look good.
And and they always say, look, because your income's increasing, don't increase your spending.
That's it.
That's the biggest mistake so many people we come across, and when we look at pre-qualifying, for purchasing, we just think, why are you spending all this money? And I think, again, we're just living in that age and that era where everyone feels they need to have everything. I need to have the holidays, I need to have designer clothes.
This is it.
I've got Deliveroo. I'm eating out. I need to take a good Instagram picture, you name it.
I guess it's sacrifice when you're buying a property and you can't have everything.
And you saying that, like, one of my biggest pet peeves is, and let me be clear, it is harder to buy a property than it was 30, 40, 50 years ago. The multiples of the salary are greater.
Yes.
Pause. Right? That's a fact. But what I would also say, 40, 50 years ago, like people's parents and grandparents, they didn't do the things we do now. So you can't be sitting at home, like, first of all, you can't want to move out because you don't want to listen to what your parents are telling you to do. You go out and you rent somewhere you can't afford. you're going on vacation 2 times a year, and then you join the chorus of people saying, oh, it's so hard for young people to buy a house. Well, it is. Pause. It is.
Yeah.
However, what are you doing to put yourself in a better situation?
Yeah.
And if you're not doing those things, then really you're not a serious person to me.
Accountability.
Yes.
We need to take financial.
And the sacrifice.
Exactly
You
that.
definitely need to be willing to sacrifice.
Yeah.
So lifetime ISAs, like a lot of people, I tell them about lifetime ISAs. Now, the numbers are a little bit different because we're in London, because it does have some upper thresholds. But if you are under like I'd say if you're in your 20s or in your 30s and you're looking to purchase a house, definitely look at a lifetime ISA, because the government, if you put in £4,000, the government is going to give you that bag.
I was going to lead on to it's even ahead of my time. The question I was going to say, what are the government incentives? But we will disclose that.
Yeah, this is one that is really overlooked.
Okay.
So you can put £4,000 in. The government's going to give you £1,000.
That's really
That's
good.
good.
Now, I think you can only open it up to age 40.
Okay.
But you'll get that 1,000. So if you're in your 20s and 30s and you're complaining that you cannot buy a house because it's so hard, and you don't have a lifetime ISA, you're not a serious person.
Well, one of us can't get that.
Well, well. You've let the cat out. So.
I think one of us.
Yeah.
Anyway, but no, that's a really useful. These are the useful tips, and as you said, the value of using a mortgage program. I'm sure, as well as doing your step-by-step guide, these are all the other incentives that you could be telling your clients as they speak to you. So, we're sort of stage 3. What would be the next stage with the mortgage process? So, person's come to you, they've done the financial check, you've reevaluated their mortgage.
They've reduced their outgoings.
Yeah.
The other thing I would say, and I see this a lot, and these are things that I've tried to counsel people on, but not everyone listens to Anthony. I know people who have maybe, and it's not a lot relatively speaking, but maybe £6,000 on credit cards.
Yeah.
And then they have £10,000 in savings. And I'm like, use the money and pay off the card. Because the interest that you're getting on your savings account is not close to what you're paying out on interest. So if it means you have to delay purchasing, because you're going to need hard currency to purchase a property.
Yeah.
Even if you have to delay that, pay off those credit cards, and the money you would have been paying to pay those credit cards monthly, put that back into your savings.
Yeah. To pay the debts off first.
Pay the debts off first.
Off the top of my head, I think interest rates on credit cards is about like 19.9%.
Yeah, it's crazy. Yeah. And I think people like to have that fact that there's money sitting in the account.
It's a good feeling.
But you just have to pay that debt.
This one is a simple math equation. If you're paying 19% on a credit card every month, and you're getting maybe 2%, 3%, 4% on your savings, it's simple math. Pay it off. Or, I know people who, what they've done is they've borrowed money from a friend or family member to pay off the credit cards to clear that off, and then pay them back each month. But because they're not paying interest on that loan, they can still clear it off quicker.
Yeah.
So, if you have friends and family like that, give them my number.
Honestly, but all of these things are quite really simple solutions.
Yeah.
That people can be incorporating just to make that preparation for mortgage or home buying achievable.
Yeah.
You touched on ISAs, and I was going to say, is there any other government schemes that we know that can help people get on the property ladder? There
are some government schemes. There's also some bank schemes. So I think everybody was talking about it maybe a month and a half, 2 months ago, when one of the banks, not going to say the bank, reintroduced the 100% mortgage.
Yes.
So this was the track record mortgage. Now, I was excited when I saw it, but living in London and for the people that I'm trying to help that are in London, it doesn't benefit them as much. But if you're in the West Midlands, if you're further up north.
What was it? Was it the threshold for lending?
What it was is, so the track record mortgage is saying a lot of people are renting. And they're kind of in this position where they're paying out so much for rent that they say they can't save. Right?
Yeah.
That was me being sarcastic. They say they can't save, but it's true. Some people are spending
It's
so much
challenging.
on rent. So what this particular bank said, well, what we'll do is we'll allow you to get a mortgage for about the amount that you're renting. Okay, so if you're paying £1,700 a month for rent, then what we'll be able to do is give you a mortgage up to £1,700. But there's another criteria, which is your salary.
Yeah.
So they'll look at your salary multiplier,
Yeah.
and they'll look at how much you're paying for rent, and they'll use the lowest of the two figures.
Okay.
And the other thing with it, it's household to household. So if you're sharing with someone, so let's just say you have a roommate and they're paying $1,000 and you're paying $1,000, you wouldn't be able to get a mortgage for $2,000 a month, and both people would have to take on that mortgage. So it's a household move.
So there is a catch
Yes,
too.
there is.
There's a
Yeah,
catch.
like you said, London, the figures are
Absolutely.
a lot higher. So just following on, keeping on the process of getting the mortgage. So at what point with you, how you would then prepare for the buyer?
So at that point, what I would do is tell them to get an agreement in principle.
Yeah.
Okay, through a mortgage broker. Don't go onto the interweb and type in a few numbers and have it spit something out.
Yeah.
And the reason why that's important is because quite often, again, just looking at my history doing lending and doing debt collections, when people are trying to get a loan, they over-exaggerate their income.
Yeah.
When people don't want to pay it back anymore, they reduce their income.
That's it.
So when you do an agreement in principle through a bank website, it's designed to make it quick and easy for you. So it's not going to ask you a lot of questions.
Yeah.
So, but what I would say, find a trusted mortgage broker, speak to them, have them prepare an agreement in principle for you, because they'll do the stress
an
testing.
agreement in principle in case someone doesn't understand
Yes.
what that
So an agreement in principle is essentially you providing information to a bank. They don't do a credit check in most cases. Most banks just do what's called a soft search. So they don't do a hard credit check for you. So an AIP is essentially an agreement in principle. So what it is you're giving the bank general information on you. So how much you make, do you have any dependents, just really general information. And the bank does what's called a soft search. So they don't do, in most cases, a hard credit search on you. And they say, well, Anna has said this, and based on that information, we'll lend her £400,000 or £500,000. Now, the problem with an AIP that you just do on a website, and sometimes it's called a mortgage in principle, sometimes it's called a decision in principle. They're all the same thing.
Okay.
But the problem that you have is there's so much criteria that goes into how much a bank can lend. So what I find a lot of times, people get an agreement in principle, as I said earlier, they go and find a property based on that, and then when they go back to the bank or go back to the mortgage advisor, they say, oh, we didn't know that you were only at your job for 3 months, or we
It's
didn't
quite
know.
misleading.
It can be. It's better than not having any guide, but it's not as good as having a real guide.
I think that's the key word. It's a guide.
Yes.
Yeah.
It's a guide what potentially you could get as a maximum lending. Yeah. So, okay.
Yeah, so I would say get an agreement in principle. And another top tip for anyone looking to purchase a home, get a mortgage broker who will help you find the property and help you negotiate the deal.
Okay.
Because estate
quite
agents, yes, it is.
Don't throw us under the bus.
We
We negotiate good deals.
Yeah, no, but you guys are professionals at what you do.
Yeah.
But
Yeah.
if you go to the bank
Yeah.
is just going to get you the mortgage.
Yes.
A lot of mortgage brokers, they're only going to help you get the mortgage, right?
Correct.
But if you can find someone that's going to support you throughout the whole process, it's better. Because remember, and this is every first-time buyer, hear what I'm saying now. The estate agent works for who?
The seller.
Yeah.
The estate agent works for the seller. The mortgage broker, find an honest one, find a good one. They're the only person in the process, unless you have professionals like yourself.
Of course.
They're the only people that work for you.
Yeah.
Everybody else is either working for themselves or for the seller.
And that is a key USP, I think, with our service. And essentially what you're saying is that, as you said, the estate agent works for the seller. So the buyer, as I say, in the buyer beware,
Yeah.
you know.
Yeah.
You need to be aware who's acting for who and where yourself is positioned. Because funny enough, some buyers do commonly end up being quite vulnerable
Yes.
in the whole process.
Yeah.
Is that right?
Yeah.
So, it's very important. And I think we can keep on with this topic because I feel like we've just started.
Yeah, we just scratched the
I
surface.
know,
But
it's like,
such a good starting point that anyone that's been listening today can really just get their head into gear and make those crucial notes. I mean, there's bits that you've enlightened me, and even, being an investor for 23 years and even working in the industry, we've learned something new today. And I think it's the critical thing I would always say to everyone is just ask those questions.
Yes.
I think when it comes to mortgages, when it comes to finance, when it comes to buying a home, there's no such thing as a silly question.
True.
You know, and we have wide-ranging clients. I'm sure, like yourself, whether they're 23 or 53, there is so much more for everyone to learn. So I think dealing with it professionals is definitely
and pay people what they're worth.
That's
And it's because I have some professionals that I know that charge a lot that are horrible.
Yeah.
So make sure you're getting good value for money, but understand that the fact that someone's been doing it 23 years, 15 years,
Yes.
or whatever, you're paying for their experience.
Yes.
You're not just paying for their time.
Correct.
You're paying for their experience, and it will save you. We're buying houses here,
Yeah,
we're buying
exactly.
properties.
I've said it sometimes. I know for a fact that people do more in-depth searches for lipstick.
Yes, that's true.
then,
More than
yeah,
even
it's the biggest,
home.
property is going to be one of your biggest investment in your life.
Yeah.
So,
Probably for most people the biggest investment. And there's a saying that they said that 90% of millionaires have been produced by owning real estate property. So there's definitely something good in it, and I think done correctly and done responsibly is definitely going to be something worthwhile for anyone. So
again, thank you for this great conversation. It was so needed, especially now, what's going on. And again, you've left us with great pointers and tips for those who are going to be viewing this first series. So, thank you so much for
absolutely
your knowledge and,
would you come back again?
I would definitely come back.
Because I think
again,
we've just got
Yeah,
started.
I know, definitely.
There's so much more, and as I said, as Victoria said, it's we're delighted to have you as our very first guest in our first episode and first series, and we've got so much more to come. But thank you once again, and I really hope everyone's making some great notes, and obviously we're here to answer any questions. Thank you very much.
Thank you.
Thank you. Thank you.